Hey, what's going on everybody? Welcome back. It's Travis here with JT Wealth. In today's video, we're going to talk about two stocks that did fairly well in the market today. The first of which is going to be AMC and the second is going to be Chargepoint. So these are two huge stocks and we're going to get into what happened and what's going on with each of them in this video today. So let's get into it. All right, so like I said, AMC up over 7% today, Chargepoint up over 10% today. So these are pretty significant jumps on the day, but we're gonna look at each stock individually and talk about what's causing that jump and if there's any other indicators that these stocks are gonna continue to rise. Of course, AMC has the hype behind the meme stocks and the short squeeze, but Chargepoint had some pretty big news today out of the Biden administration that could have caused that jump. So we're gonna look at each of those and talk about the likelihood of them increasing. But as always, before we jump right into that, I want to remind you guys, if you find some value in today's video, please remember to give us a big thumbs up and consider subscribing to the channel as well. I'm super excited to chase that 100,000 subscriber count, and I need your guys' help to do it. And lastly, before we jump into AMC, if you're looking for a new brokerage account, consider checking out the links in the description section down below where you can get a free stock or free cash just for using the links for either Robinhood, Webull, M1 Finance, or BlockFi if you're more of a crypto guy. And if you're looking for a community of like-minded investors, whether you're a dividend investor, growth, or you're looking to talk more about FIRE and the financial independence retire early movement, check out the link to our Discord chat group through our Patreon, where we talk about all sorts of stock related and finance related things every single day. So if you're looking to join that community, check out the link in the description section down below. It really helps the channel out when you guys do so. And now let's get right into AMC and how much they were up on the day. All right, here's your chart from AMC. Pulled this a little bit earlier this afternoon. They were trading at 58.27, which at the time was 7.79% up on the day. After market close, they did drop a little bit, but nonetheless, they were trading right now as I'm creating this video at 57.90, which is still up over 7% on the day. And one thing I want to point out is when you see that spike, the spike for AMC really started in late May, peaking in early June. And ever since then, everybody's been talking about the short squeeze and how AMC is going to benefit from the short squeeze. Well, as you can tell, we're about a month into that process, and most people have been saying, hey, retail investors are going to lose faith, they're going to lose hope, they're not going to hold their positions, and eventually those hedge funds are going to be able to cover their positions without having to pay such exorbitant fees. But from what we've seen here, the retail investor has managed to hold on for at least a month now. And this is a topic I heard about in somebody else's video, and I thought it was so spot on that I just wanted to bring it to you guys as well in case you didn't catch those other videos. But the point of the topic was basically, how long can these hedge funds hold their short interest on the stocks? Everybody is talking about the short squeeze and when it's going to happen, but it doesn't mean it's going to happen in a week or a month and a half or 2 months. It's just going to happen eventually. We don't know how long they're going to hold on to their positions. So check out this article from Investopedia regarding how long a company can hold a short stock. Okay, so it's titled, How Long Can a Trader Keep a Short Position? And it says, there is no mandated limit to how long a short position may be held. Short selling involves having a broker who's willing to loan stock with the understanding that they are going to be sold out on the open market and replaced at a later date. Now, a short position may be maintained as long as the investor is able to honor the margin requirements and pay the required interest, and the banker or broker lending the shares allows them to be borrowed. So I have a pretty hinting suspicion here that whatever that margin is for the short seller to hold that short position long term is significantly cheaper than should they try to cover their position immediately, which of course would start the cycle of the short squeeze, right? If all these short position holders decided that they were going to cover their position on AMC today, it wouldn't do them any good. It would actually catapult the stock of AMC up. So they're paying the margin fees, which is probably millions of dollars, but it is saving them from having to cover down and then lose even more money as the AMC stock skyrockets as a result of that short squeeze. So they really are just waiting for the retail investor to get bored, forget about AMC, sell out of the stock so that they can cover down at cheaper prices. But what if the whole AMC, GME, Reddit, Wall Street bets situation isn't going away? What if this is starting to take hold in a more mainstream way? Well, this article talks just about that specific thing. So this article came from Yahoo Finance, and it says meme stocks show that community is profitable, and that's as according to the Reddit co-founder. But as trading platforms like Robinhood create a rise in retail investor market participation and spark renewed interest in shares of companies dubbed meme stocks like GameStop, BlackBerry, and AMC, the world of finance is seeing an intersection with the social media sphere. What you're seeing is a much larger trend here, said Alexis Ohanian, the founder of venture capital firm 7676 and the co-founder of Reddit. Now, it is the intersection of community and capital. It's the intersection of social media and finance. So people are starting to give a little bit more credibility to what is taking place in places like Wall Street Bets and Reddit community subforums. But the short sellers aren't exactly getting tired and burning out either. They are hodling in their own right, and check out this article talking about that. So this article came from Bloomberg, and it's titled AMC Shorts Hang Tight During Epic Rally in the Break from January. And this says that the holding firms, or the hedge funds, raising shorts as attack from day traders has yet to inflict broad pain. So what you're looking at is the most shorted stocks and the S&P 500 quarterly change. So you can see that both shorted stocks and S&P 500 quarterly change in the first quarter of 2020 was in the negative. However, starting that second quarter, the S&P 500's quarterly change has been significantly less than the most shorted stocks that continue to hold their positions. That's quite impressive if you consider that the holders of these short positions are already down $4.5 million from January alone. And somehow I don't even think that includes the margin requirements to hold those short positions long term. That's just their net loss as the stocks continue to go up, causing their short sale values or the short stock values to go down. The article goes on to say that facing another push from day traders targeting the most shorted stocks, such as AMC, hedge funds aren't backing down this time. Professional speculators who were forced to retreat in late January amid a similar assault are instead boosting their bearish wagers. Their short positions against single shares climbed for the 9th straight week, reaching an almost one-year high relative to the overall equity holdings, according to the prime broker data compiled by Goldman Sachs. So their steadfastness was evident in AMC shares, where short interest remained elevated even after more than doubled last week. So the percentage of shares outstanding sold short edged higher Tuesday to top 20%. As the stock doubled again Wednesday, short interest only slipped to below 19%. So this looks to be kind of the battle between AMC short sellers and AMC hodlers, the Reddit community guys, the ones that are out there trying to just make their point heard. And I think, honestly, it is just going to come down to who can wait the longest. So you have to be patient if you're a hodler of AMC, even GME still, whatever the case may be. If you're in the position, you need to be in the position long term. That short position can be held for as long as they want to hold it and as long as they can continue to maintain that margin requirement. But eventually, if the positions stay as such, if the retail investors don't quit, don't give in, don't sell, that short squeeze will happen. It just might not happen this week or this month. But hold tight. You're not going to lose any money just standing by as long as that stock doesn't depreciate in value from a lot of retail investors unloading. All right, now on to Chargepoint, that at one point was up over 10% today. Let's check it out. So here's the chart from Chargepoint Holdings earlier this afternoon. Now this had them at about 9.31% up on the day, but by the end of the day, they were up 10.33%, dropping just below 10% after hours. But the prices are $34.66 as I'm making this video. So what exactly happened today to cause Chargepoint to have such a significant jump? Well, it had something to do with the infrastructure plan. All right, so the article's titled, Biden wants to build a national EV charging system under his $2 trillion infrastructure plan, but it won't be easy. The president is prioritizing a national EV charging network under the $2 trillion infrastructure bill, promising to have at least 500,000 of the devices installed across the U.S. by 2030. The Biden administration is rolling out on Wednesday the $174 billion plan to spur the development and adoption of EVs that include money to retool factories and boost domestic supply of materials, tax incentives for EV buyers, and grant and incentive programs for charging infrastructure. We need mainstream adoption here. Most automakers are partnering with third-party companies to provide charging stations. Their strategy, combined with enthusiasm from Wall Street for EVs, has driven investor demand for charging companies such as Chargepoint and EVgo. Chargepoint went through the reverse merger with a special purpose acquisition company, or SPAC, in March. EVgo plans to do the same thing in the second quarter. Now, there are only 41,400 EV charging stations in the US right now, and they're looking to put up to 500,000. So that's a huge jump. Now, fewer than 5,000 of the 41,400 are fast chargers. Now, that compares with more than 136,400 gas stations in the US today, according to Gas Buddy. So if you're Chargepoint and you know there's only 41,000 EV charging stations in the US right now, and the president just said we're going to make over 450,000 more of those, you're getting pretty excited today, as were their investors, thus causing the bump in the share price. As far as what the analysts think about this, Chargepoint is analyst Cohen's top pick for the recharging market, which the investment firm believes will be a total addressable market of about $27 billion by 2040. The company went public again in March, like we said, through the SPAC. Now, while largely new to public investors, Cohen believes the sector is poised for tremendous growth and value creation, underpinned by a large and strong unit economics and recurring revenues. Now, but the growth needs to come with EV sales as well as incentives and investments from several sources, including the federal government. Okay, right now, you absolutely need government funding at some level. This is from Wakefield. He said the reality of it is that the automakers don't have the money. Utilities have some of the money, but the business case isn't there. It's so expensive. So it's almost like the Biden administration read this article and then just kind of put it in the infrastructure bill, right? It almost touches on every single thing they said they would need for this to make progress and succeed. So now the Biden administration puts out the infrastructure bill and it touches on making grants to companies, allowing them to put off tax incentives, etc., pushing out further and bigger EV charging stations across the US, and not just in the US, but these companies are obviously going to continue pushing out into Europe, where they have the current largest market cap and largest use of EV charging stations and vehicles. But in the US alone, it does look like significant moves have been made to push the EV agenda, EV vehicles, and EV charging stations, which will be huge for companies like Chargepoint. Okay, so final thoughts on AMC and Chargepoint. Total disclosure, I used to hold AMC. I don't anymore. I sold out when I made about 300% profit. So I was excited with that. I never get upset taking profit. So who knows, maybe one day I'll put in another position. Right now, I do not hold AMC. Chargepoint, I do hold. I bought Chargepoint probably at about $14 some months ago, and I definitely plan on holding that, a really good position long term, because I believe in what they bring to the EV market. So let me know in the comment section down below what you guys think of AMC and Chargepoint. Are you holding AMC? Because if you are and you expect to hit that short squeeze, you got to hold long term, guys. Don't be impatient. The big hedge funds are counting on that. So if you're trying to beat them, you got to think long term, right? Play like the Russians. But anyways, let me know what you think in the comment section down below about both of these stocks. Thank you so much for checking out the video. If you haven't already, give me a big thumbs up, a big beer in hand thumbs up, and subscribe to the channel too. Help us get to that 100,000 mark. We appreciate you checking out the video. Thanks again. Until next time, bottoms up.